Welcome to FX Limit, where we dive deep into the world of Forex trading and explore ways to improve your trading strategies. Today, we're discussing one of the most crucial aspects of Forex trading that many traders overlook: evaluating political stability. Political factors can have a massive impact on currency values, and if you can master how to evaluate political stability, you'll have a huge edge in the Forex market. So, let's break down the best techniques you can use to assess political stability and how that affects your trades. First things first, why does political stability matter in Forex trading? Well, think about it. Currencies represent the economies of entire countries. Anything that threatens the stability of a country, like elections, protests, government policies, or international conflicts, can cause a currency to fluctuate. This volatility can either present you with massive profit opportunities or lead to huge losses if you're not prepared. So, how do we as traders evaluate political stability? The first technique is to keep a close eye on elections and leadership changes. Elections, especially in major economies, can shake up the markets. The anticipation of a leadership change alone can create uncertainty, which tends to weaken a currency. On the flip side, when a clear winner emerges, and that leader is seen as favorable to business and economic growth, you may see the currency gain strength. In Forex, we look at these events to time our trades, for instance, entering a position before the election results if we have a good sense of the outcome or waiting for the market reaction after the dust settles. One thing to always remember is that the policies of the incoming government can make or break a currency's value. For instance, if a newly elected leader is expected to push for fiscal discipline and economic reforms, the market may respond positively, leading to a stronger currency. However, if there's uncertainty about how effective their policies will be, or if they propose something that could hurt economic growth, like massive spending or protectionist measures, the currency could drop. Monitoring speeches, debates, and even campaign promises gives you valuable insight into what's to come. But it doesn't stop there. Geopolitical tensions are another factor you can't ignore. Whether it's trade wars, military conflicts, or diplomatic disputes, these events can have a significant impact on currency markets. For example, the ongoing trade disputes between the US and China have caused massive volatility in the Forex markets. Traders who understand the potential outcomes of these tensions can anticipate how currencies will react and position themselves accordingly. Now, one of the best ways to track these events and how they'll impact your trades is to use an economic calendar. Many platforms offer this tool, which shows you important upcoming political and economic events that are likely to move the market. For example, if you know an election is coming up in the UK, you can look at the economic calendar to see when the event is taking place and prepare for possible volatility in the British pound. Keeping tabs on these events allows you to time your entries and exits more strategically. Another technique is to look at government stability. This refers to how well a government is able to function and maintain control. A government that's constantly dealing with corruption scandals, resignations, or impeachments tends to create a volatile currency environment. Investors and traders will move their capital out of that currency because of the uncertainty. On the other hand, countries with stable, well-functioning governments tend to have stronger currencies. As a Forex trader, monitoring these developments is crucial for making informed decisions. When news breaks about political instability, like a vote of no confidence or mass protests, be ready for market reactions that could provide trade opportunities. In addition to that, it's important to keep an eye on international relations. If a country maintains good diplomatic relations with its trading partners, it fosters a stable economic environment, which can support its currency. But if tensions rise, whether through sanctions, embargoes, or even the threat of military action, that country's economy can be put under pressure, and you'll often see a devaluation of its currency. These types of events often create high-impact news and can present lucrative trading opportunities for those who are prepared. Now, you might be thinking, this sounds complicated. How am I supposed to monitor all these events and make trades at the same time? That's where having the right tools comes into play. You want a system that helps you make sense of these macroeconomic factors and apply them to your trading strategy. One tool that can help you do that is the Apex Trend Indicator. It's not just another indicator, It's designed to scan multiple pairs and timeframes, identifying high-probability trends that align with current market conditions. So, while you're staying on top of political developments, the Apex Trend Indicator can alert you to prime opportunities to enter the market when the trends are in your favor. It's like having an extra pair of eyes scanning the charts for you. Another important aspect of evaluating political stability is the role of central banks and monetary policy. Central banks often adjust their policies in response to political events, and these policy changes can cause significant movements in a currency's value. For instance, a central bank may raise interest rates to combat inflation or lower them to stimulate growth during times of political uncertainty. Knowing how central banks are likely to respond to political events can give you a major advantage in the Forex market. Now, a key thing to remember is that markets don't like surprises. When political events unfold as expected, the markets tend to react in a more predictable manner. But when there's a surprise, like an unexpected election result or a sudden shift in government policy, the markets can become extremely volatile. This is where your preparation pays off. If you've done your homework, followed the news, and understood the potential outcomes, you'll be in a much better position to profit from these moves. Let's talk a bit about risk management in the context of political instability. Even when you've done all your research and feel confident about a trade, you still need to manage your risk. Political events can cause sudden and extreme volatility, which can wipe out your account if you're not careful. Always use stop losses, and consider reducing your position sizes around major political events. This is where tools like the Apex Trend Indicator can be invaluable, as it not only gives you accurate buy and sell signals but also helps you set appropriate stop loss and take profit levels based on current market conditions. Another technique for evaluating political stability is to follow economic indicators that are influenced by political events. For example, GDP growth, inflation rates, and unemployment figures can all be affected by political decisions. If a government is implementing strong economic policies, you'll see this reflected in positive economic data, which in turn supports a stronger currency. Conversely, poor economic data can signal that political instability is hurting the economy, leading to a weaker currency. Lastly, never underestimate the power of media and sentiment. How political events are covered in the media can influence market sentiment. If the news outlets are painting a picture of doom and gloom, you're likely to see that reflected in the market as traders and investors react to that sentiment. On the other hand, positive media coverage can boost confidence and strengthen a currency. Keeping your finger on the pulse of market sentiment is key, and this is where social media platforms like Twitter can be especially useful. Often, news breaks faster on social media than it does on traditional news outlets, giving you an early heads-up on events that could move the market. So, in summary, evaluating political stability is a multifaceted process that involves monitoring elections, government policies, geopolitical tensions, international relations, and central bank actions. It may sound like a lot to take in, but with the right tools, it becomes much easier. By combining your knowledge of political events with tools like the Apex Trend Indicator, you can make informed trading decisions and position yourself for success in the Forex market. Thanks for watching. Make sure to hit the like button, subscribe to FX Limit for more trading tips, and don't forget to turn on notifications so you never miss a new video. Stay ahead of the market, and happy trading!